It began with a jolt. President Donald Trump announced he would fire Federal Reserve Governor Dr. Lisa Cook. This wasn't a routine shakeup. It was a direct challenge to the Fed's independence, an institution designed to be insulated from political pressure. The stated reason, alleged false statements on mortgage applications, seemed almost secondary to the act itself. For over a century, presidents have respected the Fed's autonomy, but this move bulldozed that tradition. Legal scholars and political analysts scrambled to interpret the vague "for cause" language in the Federal Reserve Act, realizing this was uncharted territory. Suddenly, Americans everywhere were forced to confront how a fight over the Fed could impact their mortgages, loans, and the economy itself. The shot had been fired, and its echo would be long and loud. So, what is the Federal Reserve? It's the central bank of the United States, created in 1913 to stabilize the financial system after years of banking panics. The Fed's dual mandate: promote maximum employment and keep inflation in check, a balancing act that shapes the entire economy. Its main tool is setting the federal funds rate, which influences everything from mortgages to credit cards. The Fed's independence is crucial. Its decisions are made without presidential approval, shielding it from short-term political pressures. This firewall ensures economic policy is based on data, not election cycles. Undermining that independence risks turning monetary policy into a political tool. That's why the Fed's autonomy has been fiercely protected for generations. The current crisis threatens to upend that tradition. At the center of this storm is Dr. Lisa Cook, a trailblazer whose journey to the Federal Reserve Board is as remarkable as it is historic. Her appointment marked a turning point, not just for the institution, but for the broader landscape of American economic policy. She is the first African-American woman ever to serve as a Fed governor, breaking barriers that have stood for over a century. Her presence on the board is a powerful symbol of progress and inclusion. Dr. Cook is an accomplished academic economist, holding a PhD from the University of California, Berkeley. Her groundbreaking research explores the economic costs of discrimination and the ways in which innovation can be stifled by inequality. She's published influential studies that have shaped how economists and policymakers think about growth and opportunity. Her career spans the Obama White House, where she advised on economic policy, and top universities where she mentored the next generation of economists. This unique blend of government and academic experience gives her a fresh, multifaceted perspective on the challenges facing the Fed. Cook's work reframes issues like racial and gender disparities, showing that these are not just social or moral concerns, but fundamental macroeconomic problems that affect the entire nation's prosperity. She argues that closing these gaps can unlock new sources of growth and resilience. Her presence on the board signals a shift toward a more inclusive, data-driven approach at the Fed, one that values diverse perspectives and seeks to understand the real-world impact of policy decisions on all Americans. Firing her isn't just about removing one governor, it's about silencing a vital, newly represented viewpoint that challenges the status quo and brings much-needed diversity to the highest levels of economic decision-making. The stakes are far higher than a single seat. At risk is the future direction of the Fed, and whether it will continue to evolve to reflect the diversity and complexity of the American economy. Removing Cook would deal a blow to diversity, independent thought, and the credibility of the Fed as an institution that serves all Americans. It would send a message that progress can be reversed and that new voices can be pushed out when they challenge old ways of thinking. This is why her potential removal is so controversial, and why the debate over her future is about much more than just one person. It's about the values and direction of America's most powerful economic institution. What does a Fed governor actually do? They're among the most powerful economic policymakers in the country. The 7-member Board of Governors oversees the entire Federal Reserve System and votes on the Federal Open Market Committee, which sets interest rates. Governors analyze economic data, regulate the nation's largest banks, and write rules to keep the financial system stable. Their 14-year terms are designed to insulate them from political pressure, allowing for tough, long-term decisions. A governor's vote can impact everything from your mortgage rate to the safety of your bank deposits. Independence is essential. Governors are meant to be impartial referees, not political appointees. That's why the attempt to remove one is so alarming. The White House announced it was removing Dr. Cook for cause, citing what it described as serious false statements on mortgage documents. Officials emphasized that this was not a decision taken lightly, but one rooted in the need to uphold the highest standards of integrity within government institutions. The administration released a detailed statement outlining the alleged discrepancies, aiming to show transparency and justify the move to the public and lawmakers alike. They argued this was about accountability, not politics, pointing to a specific legal provision that allows the president to remove a Federal Reserve governor for cause. Legal experts were quick to weigh in, debating whether the cited provision truly applied in this case, and whether the evidence met the high bar required for such a dramatic action. Dr. Cook, through her attorney, called the move baseless and illegal, vowing to fight it in court. She insisted that the allegations were unfounded, and that the administration was twisting the facts to serve its own agenda. Her legal team immediately filed for an injunction, seeking to block her removal while the case played out in the courts. She framed the allegations as a pretext for a political purge, not a genuine ethical concern. In public statements, Dr. Cook argued that her independence and willingness to challenge the administration's economic policies had made her a target. Supporters rallied behind her, warning that this could set a dangerous precedent for the future of the Fed. The Fed itself issued a cautious statement, defending the importance of fixed terms and independence, while deferring to the courts. The central bank's leadership stressed that the institution's credibility depends on its ability to operate free from political interference, and urged all parties to respect the legal process as it unfolded. The clash is about more than one person. It's about whether a president can weaponize for cause to remove any governor who resists political pressure. The stakes are enormous, with legal scholars warning that the outcome could either reinforce or erode the delicate balance between the executive branch and independent agencies. Cook's supporters see this as an existential threat to the Fed's autonomy. They argue that if the president succeeds, it could open the door to future purges of officials who refuse to toe the political line, fundamentally altering the nature of the central bank. The White House insists it's simply enforcing the law. Critics, however, see a smokescreen for a power grab. The debate has spilled over into the media, with commentators and lawmakers fiercely divided over the administration's motives and the potential consequences for American democracy. The legal and political battle lines are drawn, with both sides preparing for a protracted fight. The case is expected to set a precedent that will shape the relationship between the White House and independent agencies for years to come. The outcome could redefine the limits of presidential power over independent agencies and determine whether the Federal Reserve can truly remain above the political fray. The legal fight centers on two words: for cause. The law doesn't define it, leaving room for interpretation. Does it mean official misconduct, or can it include personal matters? The White House argues for cause covers any ethical lapse, even before joining the Fed. Cook's team says it's a high bar, meant to protect against political firings. If the president can remove a governor over unproven allegations, the Fed's independence is gone. The Supreme Court will likely decide, setting a precedent for the balance of power between the White House and independent agencies. The future of the Fed's firewall is at stake. The official reason for firing Cook is under legal debate, with lawyers and political analysts dissecting every statement and memo. But beneath the surface, a much larger battle is unfolding, one that goes to the heart of America's economic future. The real context is President Trump's campaign to pressure the Federal Reserve to lower interest rates, a campaign that's played out both in public speeches and behind closed doors. He's repeatedly criticized the Fed for keeping rates too high, often using social media and press conferences to make his case directly to the American people and to the central bankers themselves. Trump argues that high rates hurt economic growth and cost American jobs, painting the Fed as an obstacle to prosperity. Lower rates, he claims, would boost the economy in the short term, a tempting prospect for any president facing re-election, as it can mean more spending, more jobs, and a stronger stock market. But the Federal Reserve's mandate is to think long-term, balancing growth with the risk of runaway inflation. Cutting rates too aggressively could overheat the economy, driving up prices and eroding savings. This isn't Trump's first attempt to influence Fed policy. He's made headlines before for his open criticism and attempts to sway central bank decisions. He's even gone so far as to threaten to fire officials who disagree with his approach, breaking with decades of tradition that kept the Fed insulated from political pressure. Removing Cook is widely seen as an effort to install a loyalist, someone who will support aggressive rate cuts and align the Fed more closely with the president's economic agenda. It's a calculated, strategic move to shift the balance of power within the Fed, tilting it toward the White House and away from its traditional independence. The message is clear. The independence of the Federal Reserve is under siege, and the outcome could reshape how America manages its economy for years to come. The stakes are enormous, not just for Wall Street, but for every American whose livelihood depends on stable prices and steady growth. This is about more than one governor. It's about the Fed's very purpose, its ability to act independently, and the future of monetary policy in a deeply divided political climate. Wall Street's initial reaction to the firing threat was surprisingly calm. Stocks even rose as investors bet on lower interest rates. For many traders, Fed independence is abstract. Lower rates mean immediate profits. But beneath the surface, warning signs appeared. The dollar fell, signaling global concern about U.S. stability. Gold prices climbed, a classic sign of investor anxiety over political interference. International markets took the threat to the Fed's independence seriously, fearing long-term instability. The market's split reaction revealed attention short-term greed versus long-term fear. Some cheered the prospect of easy money, while others worried about the erosion of trust in U.S. institutions. The real risk isn't a market crash today, it's the slow undermining of the system's credibility. The world is watching, and the consequences could be lasting. The stakes go far beyond Wall Street. This battle over the Fed's independence isn't just a Washington drama, it affects every American's financial future. If presidents can fire governors for political reasons, future Fed decisions could be driven by election cycles, not economic data. That risks cycles of boom and bust, eroding savings and threatening jobs. The Fed's independence has protected the economy before, allowing tough choices that set the stage for long-term growth. A politically controlled Fed could let inflation spiral, devastating families' purchasing power. Protecting the Fed's autonomy is about safeguarding your savings, your job, and your future. This fight is about economic security for every household. The outcome will shape the stability of the American economy for generations.